Hello and welcome to Econosium, a channel where we delve into the fascinating world of economics. We take complex economic concepts and break them down into digestible insights. Today, we're venturing into a riveting comparison between two of the world's economic powerhouses, the United States and China. We'll explore questions like, how do their economies compare on the global stage? What are their respective strengths and challenges? And finally, what's the future outlook for these two giants? Intriguing, isn't it? So fasten your seatbelts as we embark on this economic journey. The United States, a beacon of capitalism, leads the world in nominal gross domestic product, a standard measure of economic health. Its economy, characterized by high-tech industry and services sector, is a testament to the power of free markets and innovation. On the other hand, we have China, a nation that, despite its communist governance, has embraced market principles to fuel its meteoric rise. It's the world leader in purchasing power parity (GDP), a different measure that takes into account the relative cost of local goods, services, and inflation rates. China's economy, with its impressive manufacturing capabilities and large agriculture sector, has lifted hundreds of millions out of poverty. Both nations together account for a staggering 76% of the world's GDP in nominal and purchasing power parity terms. Their intertwined economic relationship is complex, characterized by both conflict and cooperation, and has significant implications for global trade, investment, and financial markets. But how do these two titans of trade compare? Let's find out. First, we'll take a look at the U.S. economy. In the global economic arena, the United States holds a prominent position. It leads the world in nominal gross domestic product, a measure of the market value of all finished goods and services. This dominance is a testament to the country's robust and diverse economy. The U.S. economy is characterized by its impressive growth rate. In the second quarter of 2023, it expanded by 1.2%, outpacing many other nations, including China. This growth is projected to continue, with the economy expected to expand by 5.8% in the third quarter. One of the key sectors driving this growth is the services sector. Compared to its global competitors, the U.S. has a remarkably large services sector, which includes industries like finance, healthcare, and entertainment. This sector's dominance is a reflection of the country's advanced state of economic development and the high demand for these services among the American population. However, the U.S. economy is not without its challenges. One of the significant issues it faces is the slowing rate of population growth. This trend could potentially lead to a decline in labor force participation and, consequently, a slowdown in economic growth. Moreover, the costs associated with climate change and trade restrictions pose threats to the stability of the U.S. economy. Yet despite these challenges, there's a sense of optimism about the future of the U.S. economy. Treasury Secretary Janet Yellen attributes the rise in long-term bond yields to confidence in the U.S. economy. This confidence is buoyed by the country's strengths in areas such as venture capital investments, which play a crucial role in fostering innovation and driving economic growth. In the face of global competition, the U.S. economy has proven its resilience and adaptability. It remains a powerful force in the international economic landscape, setting the pace for economic growth and technological innovation. Now that we've understood the dynamics of the U.S. economy, it's time to turn our gaze eastward. Next up, we have the Chinese economy. China, the world's most populous country, has been a global economic powerhouse for several decades now. Its rapid industrialization and emphasis on export-led growth have transformed a predominantly agrarian society into an industrial titan. However, the Chinese economy is not without its challenges. The country's growth rate has been slowing down, with a recent report stating that it grew by only 0.8% in the second quarter of 2023. This is slower than the growth rate of the U.S. economy, which expanded by 1.2% in the same period. China's economic challenges are manifold and complex. The country is grappling with deflation, youth unemployment, a wobbly property sector, and subdued bank lending. Trade, once the lifeblood of the Chinese economy, is also showing signs of decline. Investors have been pulling out of Chinese markets, leading to a widening gap between U.S. and Chinese bond yields. This is not a good sign for China, as it suggests a lack of confidence in the country's financial markets and its ability to generate future growth. However, it is important to note that despite these challenges, China remains a formidable economic force. It dominates supply chains for critical and everyday goods and is a major export market for many countries, including the U.S. In terms of sectors, China holds the lead in agriculture and industry, but the U.S. has a larger services sector. This suggests that while China's economy is still heavily reliant on manufacturing and agricultural production, the U.S. economy is more diversified and services-oriented. Furthermore, China's Belt and Road Initiative, a trillion-dollar global infrastructure project, underscores its ambition to reshape the world economy and cement its position as a global economic leader. On a per capita basis, however, China's GDP is 6 times smaller than that of the US, indicating a significant wealth gap between the two countries. This underscores the fact that while China's economy is large in absolute terms, its wealth is spread over a much larger population. With an understanding of both economies, it's time to put them head-to-head. When these two economies are compared side by side, some interesting insights emerge. Let's start with a broad brushstroke: the gross domestic product, or GDP. The United States leads in nominal GDP, while China has been ahead in terms of purchasing power parity, or PPP, since 2017. A tale of two measures, if you will. But let's delve deeper. The GDP per capita in the United States is significantly higher than in China, thanks to a smaller population. In terms of wealth, the United States ranks 5th globally, while China lags behind at 63rd. These figures highlight the stark contrast in wealth distribution between the two nations. When it comes to growth rates, China has experienced higher GDP growth rates historically, reaching a peak of 19.3% in 1970. The United States, on the other hand, reached its high of 7.24% in 1984. However, recent reports suggest an interesting twist. The US economy is growing faster than China's, an unexpected turn compared to earlier predictions. Now let's consider the sectors that drive these economies. China takes the lead in the agriculture and industry sectors. In contrast, the US has a larger services sector, reflecting the nation's transition from a manufacturing-based economy to a service-oriented one. Trade relationships between the two nations are robust, with China being the 3rd largest trading partner for the United States. However, the economic dance is not all smooth sailing. The United States has imposed sanctions on various Chinese companies and organizations, adding an element of tension to the economic ballet. Investors, too, have been pulling out of Chinese markets, leading to a wider gap between US and Chinese bond yields. This is a testament to the confidence investors have in the US economy, a sentiment echoed by US Treasury Secretary Janet Yellen. Forecasts suggest that China might surpass the United States in terms of GDP by 2035. However, this prediction is not without its critics. Some experts question whether China will indeed overtake the United States as the leading economic superpower. While the future is uncertain, one thing is clear: the economic dance between these two nations will continue to shape the global economic landscape. In the grand scheme of things, both economies play a pivotal role in the global economic narrative. The United States, with its robust economic growth and high GDP per capita, continues to hold a dominant position in the world economy. With confidence in its economy leading to a rise in long-term bond yields, the US is demonstrating its resilience and adaptability in the face of global economic shifts. On the other hand, China, despite facing challenges such as deflation and declining trade, remains a significant player in the global economic arena. Its Belt and Road Initiative, which has provided over $1 trillion for global infrastructure, and its dominance in supply chains for critical and everyday goods, underscore China's strategic approach to securing its position on the global stage. However, the gap between these two economies is evident in various aspects, especially when we consider the GDP per capita. The United States holds a higher rank in terms of wealth, while China, despite its large population, ranks considerably lower. The relationship between these two economic giants is complex, marked by both competition and cooperation. Understanding the dynamics between these two economies and keeping an eye on their economic trends is essential to comprehend the global economic narrative. In conclusion, both the United States and China are indispensable to the global economy, each with its strengths and challenges. The future will undoubtedly hold more twists and turns in this economic rivalry, and we at Econocium will be here to guide you through it. Thank you for joining us on Econocium for this economic deep dive. Stay tuned for more insightful discussions on the world of economics.